Sellers across the US housing market are doing big price cuts on Zillow, with Zillow themselves saying that the housing market is cooling quickly and that sellers are now cutting the price at an unusually high rate. This is great news for you as a home buyer. It means that over the fall and winter, home prices are likely to get significantly cheaper, especially in certain cities that are now getting hit hardest by these seller price cuts, like Boise, Idaho, our number 10 area where the sellers are cutting the price. This was the housing market that crashed first. The downturn in Boise started 2 years ago in 2021, and it's continuing rapidly in late 2023, with the seller on this listing just doing a $25,000 price cut to a price less than what this house was worth in March 2021. And this crash in Boise is likely to continue to get worse because home prices across the metro are still way too expensive, with home values in Boise being approximately 43% overvalued. And you can see this overvaluation in Boise has declined over the last couple years as prices have dropped. However, it's still extremely high and suggests that prices have further to fall, especially now that the remote workers are getting called back into the office, with Redfin reporting that 1 in 10 home sellers are moving because they're being called back into the office, with one real estate agent in Boise saying they have a pair of clients who are selling their home after only a year and that these sellers are having to take a $100,000 loss on their house. And it's not just in Boise where stuff like this is happening, it's also occurring in our number 9 housing market where sellers are cutting the price the most, Dallas, Texas. Now, Dallas is really interesting because it might be America's strongest economy. However, Dallas is one of America's weakest housing markets right now, with 33% of the sellers in Dallas last month cutting the price on their listing. You can see that's way up from the lows that occurred during the pandemic, with the primary drag on Dallas's housing market being a big surge in inventory. There's lots of homes for sale across the DFW metro, particularly from home builders who have been very aggressive to cut the price. If we zoom in on the northern suburbs of Dallas, you can see all of this new home building inventory, which is why, for instance, on this listing up in Salina, builders had to cut the price by over 60 grand over the last year. So watch out for these builders if you're a home buyer or an investor. They've already cut prices by over 13% from peak, and there's likely more declines coming. Now, home builders are also a prominent feature in our number 8 city where prices are dropping fast right now in the US housing market. This is an area in Florida that a lot of people flocked to during the pandemic. It was a boom town over the last 2 years, but now things are slowing down heavily in Sarasota. Sarasota is on the western side of the state and has had a big increase in inventory over the last year, with homes for sale going up 30%. And that higher inventory is now intersecting with declining demand, which is causing sellers across Sarasota to get a little panicky. Like on this listing, where they did a $31,000 price cut a couple months ago down to $599,000, turns out that that was actually the 4th price cut since they originally listed in June. So they've cut the price on this listing over $100,000, and it's still languishing on the market. And these price cuts in Sarasota and Florida are going to continue through the end of the year and into 2024. We're seeing a big downturn in home buyer demand across the state of Florida, because now that the pandemic's over and mortgage rates are high, not nearly as many people want to buy second and third homes in the state, with Redfin reporting that demand for vacation homes just crashed to a 7-year low due to high housing costs and return to office mandates. The way Redfin analyzed this was by looking at mortgage rate locks for second homes. You can see those spiked during the pandemic. They almost doubled, but have since plummeted down to the lowest level since about 2016. But folks, that's not the only problem for Florida's housing market and for the other cities on this list. Not only are we seeing a decline in demand for vacation homes, we're also seeing a decline in demand for investment properties, particularly Airbnb home buying. And that's something that has plummeted over the last 3 to 6 months because the Airbnb market has taken a big downturn, which is something I initially reported on back in June, the Airbnb revenue collapse in certain cities. Well, that revenue collapse is now starting to have a negative impact on a lot of different housing markets, particularly our number 7 city where sellers are cutting the price, Sevierville, Tennessee. Now, I know what some of you are saying. What and where is Sevierville, Tennessee? Well, Sevierville is a mountain town in eastern Tennessee, about an hour southeast of Knoxville, where you can see a lot of sellers are cutting the price right now, a 35% price cut rate, which is now the highest price cut share on record. And why are sellers cutting the price in Sevierville? Well, a lot of them are Airbnb owners who are desperate to get out of the market because they're simply not making money anymore. Like on this listing, where there have been numerous price price cuts. They originally listed it for $850,000 last year in May 2022, and they have since cut the price to $650,000, a $200,000 reduction, and they're saying that it's currently an overnight rental with gross income of $76,000 per year, which is not very good. $76,000 in gross income probably nets them $40 to $50 in net income, which is a fairly low 6% cap rate for a short-term rental, which suggests that this house in Sevierville is going to continue to sit on the market for a while. Now, what's interesting is there's a lot of people out there who are skeptical that there's actually an Airbnb crash. When I originally did my report back in June saying that there's a lot of cities with a big collapse in Airbnb revenue, Airbnb themselves came out and said that I was wrong, that the market's fine, but clearly the Airbnb market in towns like Sevierville is not fine. With key data reporting that Airbnb revenues are down 14% year over year for professional property managers. In addition, the rest of the year looks even worse, with revenue down 32% through the end of 2023 on their forward booking schedule. Now, a slowdown in the Airbnb market is also having an impact on our number 6 housing market, where sellers are really starting to cut the price. This is an area also in the state of Tennessee that relies heavily on tourism to goose its economy. Where am I talking about? That would be Nashville, Tennessee, with data from AirDNA showing that Airbnb revenues are down 10% in Nashville over the last year, with those decline in Airbnb revenues now leading to some forced selling in a lot of different pockets around the Nashville metro. In particular, we can see sellers are getting very aggressive in cutting the price just directly to the north of the downtown area, where there's lots of Airbnbs in these zip codes in East Nashville. There's also a lot of price cuts here in North Nashville and West Nashville. These price cuts have hit levels that we've never seen before. However, the downturn in Nashville isn't simply restricted to areas where there's a lot of Airbnbs. We're also seeing a downturn in some of the more affluent locations where there's million-dollar homes. Like on this listing, which is currently on the market for $999,000. Now you can see they did a $96,000 price cut last month, which was their 4th price cut. They originally listed back in August 2022 for $1.25 million and have since reduced it by over $250,000 to $999,000. However, the problem for Nashville's luxury housing market, as well as, expensive homes everywhere in America, is that simply very few people can afford to buy these homes now, with mortgage rates approaching 8%. The 30-year fixed mortgage rate is hovering around 7.7% right now, the highest level that we've seen in over 20 years, which means that the payment levels that home buyers have to fork out for these luxury houses are just getting crazy. Like on this house right now, if you were to buy it with a mortgage, your monthly payment would be $6,600 a month, which is over $70,000 per year. People simply do not have the money to spend on expensive homes like that, which is why I think the downturn in the luxury market is going to actually get more severe over the next 3 to 6 months, and you're going to see a lot of these owners on these million-dollar listings doing aggressive price cuts to get them under $1 million. However, we got to stop the video at this point, folks, and acknowledge the elephant in the room, and that's that for many of you, if you're a home buyer and investor, many of you live in a city where you're not yet seeing these price declines. In fact, I polled you guys and I asked you the question: are home prices declining in your area right now? So far, over 12,000 of you have voted in this poll, with 35% of you saying prices are going down, but 24% of you saying prices are going up, with 41% saying prices are staying the same. So actually, only 1/3 of you guys watching this video are seeing these price declines right now, which is a frustrating thing if you're a home buyer. You see the mortgage rates at 8%, and you see some cities are exhibiting pretty big price declines, but in your area, it's not happening, and a lot of you are saying to yourselves, like, what gives? Because you can see data from Reventure app is showing the share of sellers cutting the price. It's highest in Tennessee, Texas, Colorado, Utah, Idaho, Arizona. A lot of these markets in the south, southeast, and mountain regions where the crash has started. But conversely, price cuts are very low in New York. They're very low in New Jersey. They're low in West Virginia. They're low in Illinois. They're even low in California. So if you're in these areas in blue, you're not totally seeing these price declines yet. However, I think you will, because the leading indicators on the housing market are showing a big slowdown nationally over the last month or two, which is something that Zillow themselves are acknowledging. They just put out an article saying that the fall housing market is cooling quickly, and that this seasonal cool down is shaping up to be extra chilly this fall, with competition in the housing market cooling off remarkably fast. And Zillow, they tend to be more bullish on the housing market. So when you see them coming out with a research piece that is saying, hey guys, Pay attention to the price cuts. There's been a big slowdown buyer competition. That's something that suggests the downturn in the market we're seeing right now is real. Additionally, Redfin is also coming out and acknowledging this downturn. Their charts are showing a big increase in what's called the months of supply on the market, which takes the total inventory and divides it by the home sale activity. Right now, we're at 3.3 months of supply, which is actually above where we were last year, which is now causing the number of listings with a price cut to surge, also above the same level last year. So expect prices to continue to drop, everyone, especially in our number 5 city that's getting hit with a big wave of seller price cuts, Phoenix, Arizona. Now, Phoenix is a very interesting housing market. It was one of the first cities to crash last year when the downturn started. However, Phoenix had a little recovery to start 2023, which caused the inventory levels to actually collapse back down by over 50% and provided some support for home prices in Phoenix. So the prices stopped going down in Phoenix and they started actually going up a little bit due to this lower inventory. However, we're now seeing the market shift back to a downturn. A lot of desperate sellers in Phoenix, particularly investors of long-term rentals and Airbnbs who can't find any tenants, and they're now finally throwing in the towel, and the new listings are beginning to increase again, with the price cuts also increasing again. And we're seeing these price cuts most acute in the southeast part of Phoenix towards southern Scottsdale, Tempe, and Gilbert. 55% of sellers cut the price in August. That's down from what it was a year ago, but is well above the long-term average for price cuts for the month, with similar downward pricing pressure occurring in our number 4 city where sellers are cutting the price right now, San Antonio, Texas. That's right, everyone. Another city in the Southwest where the housing downturn is really accelerating, with the primary issue for sellers in San Antonio's housing market being lots of competition of new listings and inventory. With roughly 8,500 homes in San Antonio now available for sale, a figure which has doubled from the lows that occurred during the pandemic and is now above the long-term average of inventory. And what we've consistently seen in this housing downturn thus far is that once a city basically gets back to the long-term average in inventory, whether it's Boise or Phoenix or some of the other markets where there's been a downturn, prices really start to go down. That's really an important thing to remember if you're a home buyer and investor trying to gauge when will be the right time to buy in your market, when prices are going to drop. Look at the inventory levels and see, are we getting close to the long-term average? Are we getting above the long-term average? If so, that's a signal that prices could enter a free fall mode. Now, our number 3 housing market where prices are dropping right now is another city where the inventory has exploded over the last couple of years. The inventory in Pensacola, Florida has really surged, which is now putting downward pressure on prices. Now, Pensacola, this is a military town on the Florida Panhandle next to some of the nicest beaches in the world, where we can see 34% of sellers cut the price in the most recent month. And what we're seeing in Pensacola is a lot of houses now just lingering on the market for sale. And this is a trend that's occurring across the US more broadly. As a lot of these sellers over the last year, they decided to list their house way too high. They got greedy. And as a result, now that the demand has fallen, they're left with no buyers and having to cut the price. Like on this listing in Pensacola, it's a 3-bed, 2-bath on the market for $299,000. Now, Zillow says it's only been on the market for 1 day. However, if we go to the history, we can see they originally listed it in January 2022 for $350,000. Then they cut the price a little. Then they put it on the market for rent at $1,700. Looks like they rented it for a year and then tried to rent it again, but then couldn't rent it. So then they decided to relist it for $299,000 at a 14% reduction. We're seeing more and more sellers do this, where they had their house listed a year ago, they couldn't get the price they wanted, so they listed it for rent, then they couldn't rent it, and now they're relisting it at a lower price. Reality is setting in. And actually, one of you in my comment section, someone who's a channel member here, pays the $5 a month for the exclusive content, he said that he has 27 properties for rent in Maryland, suburban DC, and Tampa for his property management company, and that the rental inventory is rising out of control. Properties are sitting on the market for 2 to 3 times as long as historical norms because all these homeowners who purchased homes in the last 3 years, they have to move, they can't sell. Now they're trying to rent the homes and they're flooding the rental market. And he says these homeowners are being forced to take the slow pain of renting the house for hundreds or thousands of dollars below what the mortgage and expenses are, or they'll have to do a foreclosure or short sale if unable to subsidize the loss. It's finally starting to look like the beginning stages of 2008. And that's such great on the ground insight, everyone, because a lot of people thought, oh, these homeowners with low mortgage rates could just rent their houses, no big deal. But we're finding out that now That's not totally the case. The rental market in America is slowing significantly. There's been huge increases in rental inventory and rents are now going down, which means that a lot of homeowners and investors especially, they're starting to run out of options. Maybe for 6 months or 9 months or 12 months, they could have delayed the inevitable and not cut the price and not sold their home. But now many of these people are waking up to reality. Especially in our top 2 housing markets where sellers are cutting the price, everyone, these 2 cities are kind of a cut above everywhere else on this list in terms of how much the prices have gone down and are continuing to go down, particularly our number 2 city where sellers are reducing the price, the San Francisco Bay Area, everyone. And this is kind of the first housing market where we're seeing prices go down so much that lots of owners are now selling at a substantial loss. With more and more listings popping up like this one in San Francisco, it's a 2-bed, 2-bath condo for $929,000. Still a ridiculous price, but here's what I want you to pay attention to. That price that's listed for less than the property was worth back in 2015. Here's another example, a $799,000 condo in San Francisco, which is now listed for $140,000 less than what they bought it for in 2017. They bought it for $940,000 in 2017. Now it's on the market for $799,000. And it doesn't take a rocket scientist to understand why home prices in San Francisco are going down. Number one, they're just way too expensive. The typical value across the metro is over $1 million still, which makes it a non-starter for the vast majority of households, especially with mortgage rates at 8%. In addition, there's been a huge outbound migration from San Francisco since the pandemic, lots of retail stores closing down, lots of companies laying off workers, office vacancy rates are surging across the city. There's all types of issues in San Francisco's housing market, which are going to continue to weigh on it for the next couple years. Now, before I get to the number 1 city where prices are dropping, everyone, I just want to say, if you enjoyed this video and if you want to look at more data on the housing market, if you're a home buyer and investor who wants to make a more educated decision and avoid losing lots of money in the housing market, I would encourage you to go on Reventure app, www.reventure.app, where you can look at data on seller price cuts, inventory, and home price overvaluation rates in every city and zip code in America. Looking at data on Reventure app would have actually helped you avoid buying a house in our number 1 city where prices are dropping right now. Lots of people in this city bought in the last 2 years thinking, oh, this is a great place to buy. And now these people, they're losing lots of money in Austin, Texas, where an astounding 46% of sellers cut the price in the most recent month. And those price cuts, they're getting very severe. With the seller of this house in Pflugerville, a suburb to the north of Austin, reducing the price from $530,000 to $400,000, a massive 26% reduction. However, folks, despite these declines, home prices in Austin are still 28% overvalued, which is a big improvement from the 50% levels of overvaluation last year. However, we still have a long ways to go before local home buyers in Austin can afford the prices and mortgage payments, which means this market will likely continue to crash. Go to www.reventure.app to check out this housing market data in your city and zip code.